Hi guys, welcome to the discussion on economy topics which have come in GS paper 1. This year we found that approximately 12 questions were asked from economics, and those questions were more on the finance side. UPSC has been increasingly asking questions on the finance side, and the questions are decreasing from money and banking. But there are questions which are coming on RBI. So let's have a look at the questions. The first question which we got, with reference to investments, consider the following: bonds, hedge funds, stocks and venture capital. And they are asking which of the following are treated as alternative investment funds. So what are these alternative investment funds? As you can see, this is the definition I've taken from SEBI. SEBI is telling an alternative investment fund means any fund which is established or incorporated in India, which is a privately pooled investment vehicle which collects funds from sophisticated investors, whether Indian or foreign, for investing it in accordance with a defined investment policy for the benefits of its investors. Basically, a private sector person comes in, a company comes in, they pool in the funds and they try to manage these funds. This is called as an alternative investment funds. And in this alternative investment funds, you have three kinds of categories. Category 1, which speaks about venture capital funds, including angel funds. Now, when we see this, we find that venture capital is here. So venture capital comes. And most of these funds, SME funds, infrastructure funds, all of these are also hedge funds, right? The other definition for hedge funds is this, where you're hedging something against the capital. When you come to bonds and stocks, they are not something that the private investors are, they are not funds which are being pulled in. It is in the share market, it is there in the company, but it is not an alternative investment fund. They are regular investment funds. Understand this. These are regular investment funds. Alternative investment funds are something like these: SME funds, social venture funds, infrastructure funds. These are the alternate way of raising capital, right? Other than the regular traditional way. These come under the traditional way. Therefore, only two are correct. These two are not included in that. Answer is only 2. Clear? Moving on to the next one. Which of the following are the sources of income for RBI? Now, there is a question which comes every year from RBI, and UPSC has been increasingly focusing on the contents that is present in the RBI website, right? So we have to be aware about how RBI is earning, especially because there is surplus money being earned by RBI every year. We find that RBI's related questions have been increasing, especially how RBI is earning money or what RBI is dealing with. Now, when you look at the question, they are asking which of the following are the source of income for the Reserve Bank of India. RBI is dealing with buying and selling of government bonds, OMO operations, and for every OMO operations, RBI charges a fee, right? Definitely they are earning income from this. Buying and selling of foreign currency, Forex, is also the prerogative of RBI, and they charge a transactional fee for this, right? Currency trading, RBI buys and sells to manage, earning profits from these transactions. They also make profits from this. Foreign currency investments. Pension fund management. RBI is not involved in pension fund management. It is not the regulator for pension fund. It is PFRDA, which is the regulator, which has been merged with IRDAI, right? Lending to private companies. Now, RBI does not lend to private companies. It is the banker's bank, right? So this is not a major source of income, or this is not at all a source of income. Printing and distributing currency notes. Yes, RBI charges something called as seigniorage. RBI charges something called as seigniorage, and the seigniorage is what RBI is charged for printing the currency notes. Therefore, we find that 1, 2 and 5. 1, 2 and 5 are the answer, right? 1, 2 and 5 is the answer for this question. Moving on to the next one. Now, the next report, again, as I said, though RBI is being used, it is mainly a finance related concern. Consider the following statements. The Reserve Bank of India mandates all the listed companies in India to submit a business responsibility and sustainability report. When it comes to companies, listed companies, or when such terminologies are coming, then your go-to regulator is SEBI. SEBI is the one which is dealing with this. SEBI has mandated that listed companies should submit a business responsibility and sustainability report. What does this report do? This report makes disclosures about non-financial transactions, especially it's about how the company is going to sustain over a long term, what is the vision, what is the plan, what are you expecting in the next 3 years, 5 years. So this is a report that the SEBI mandates every company to submit just to ensure that the companies are functioning in a good governance manner, companies are functioning in an ethical manner, and there is no error in the transactions or there is no malified intentions present in the company. This is one way of how SEBI is trying to protect the investors, because it is a listed company. There are investors who are, small investors who have invested in the company. To protect them, SEBI has mandated this report. Now that is what even the statement says from the SEBI's website. It is a reporting framework introduced by SEBI for listed companies in India. It aims to increase the level of reporting on environmental, social and governance performance, ensuring companies practice responsible business and contribute to sustainable development, right? That is so you find second one is true, first one is false. Answer is 2 only, right? Only 2 is correct. Moving on to the next one. Now this question has been a bit controversial regarding this, whether agricultural income from allied activities, is it taxable or not. A lot of debate has been going on, hair splitting has been going on with respect to is this right, is this wrong. So let us go with the data and the facts which is present in Income Tax Act. Now when you come to the Income Tax Act, in India, income from allied agricultural activities like poultry farming, wool rearing in rural areas is exempted from any tax. Actually, they're exempted from GST, but they're not exempted from income tax, right? There is income tax which is levied on poultry farming, whatever earnings is come. This is considered as business income. This is not considered as agricultural income, right? This is considered as a business income. Agricultural income has been defined extensively in the Income Tax Act 1961. And this does not come under that. This comes under business income. Moving to the second statement. Rural agricultural land is not considered a capital asset under the provisions of Income Tax Act 1961. This is true. See, the keyword over here is rural agricultural land. Rural, very, very importantly. As you can see, I have taken the Income Tax Act 1961, where it is very clearly given agricultural land in India, especially which does not come under any municipality. See, there is an exemption. If the agricultural land is coming within the municipality, which is an urban area, then that land is not exempt from taxation. It is considered as a capital asset. But if it's in a rural area, it is not considered as a capital asset. Why it is not considered as a capital asset? Because whatever gains is coming from the land, whatever you're growing, whatever capital gains is coming, they are tax exempt. Agricultural income is tax exempt, right? That is what has been very clearly given over here in the Income Tax Act. Therefore, statement 2 is correct. This is correct. Statement 1 is wrong, and you have an answer. Statement 1 is not correct. Statement 2 is correct. This is your answer. D is your answer. Clear? Moving on to the next one. Now, consider 3 statements as regards returns from an investment in a company, right? Now pay attention to this. Returns from an investment in a company. Returns from an investment. Generally, bondholders are considered to be relatively at lower risk than stockholders. Relatively at lower risk than stockholders. This is the statement 1. Now statement 2 is telling bondholders are lenders to a company, whereas stockholders are its owners. This is very, very important. Bondholders are lenders. So, right, coming to statement 3, for repayment purpose, bondholders are prioritized over stockholders by a company. Yes, bondholders gain more priority than stockholders. Why? Because bondholders are lenders. See, whenever you try to sell anything, let's say you're trying to sell your property, but there is a loan on the property. First, it is a requirement that you clear off the loan and then you sell the property. The property, you are the owner of the property. Yet, first you have to clear your loans, only then you can sell the property. That is how the law goes. That is why statement 2 is critical, because they are telling bondholders are the lenders. So they will always get that first entitlement for repayment. They'll always get that first entitlement for repayment, and stockholders are its owners. Owners will always get the leftover amount. And see, even with regards to returns from an investment in a company, right? The question is speaking on two lines. One, relatively at lower risk, and returns from investment from a company. Let us say a company is generating a profit of somewhere around 500 crores. A company is generating a profit of around 500 crores, and the debt repayment is somewhere around 450 crores. Every year they have to repay a debt of 450 crores. They have to give it to the bondholders. 50 crores is what the shareholders are getting. Even over here, you will find that because they are the lenders, first repayment goes to them, right? And for them, it is more attractive for as an investment compared to stockholders. There might be scenarios. See, if this falls to 400 crores too, they are the first people who get paid. You have to pay the bondholders 450 crores. They are going to get paid, come even if you are in loss or even if you make extraordinary profit. Now, in this scenario, yes, stockholders look more, are able to get more profit, but it's risky. Thereby, when you see this, returns from an investment in a company, based on that, statement 2 is very, very important for this part. Bondholders are lenders, that is why they get priority for payment. So, when you look at the options, statement A seems more suitable as statement 2 and statement 3 both explain statement 1. Clear? Moving on to the next question. India accounts for a very large portion of all equity option contracts traded globally, thus exhibiting a great boom. This is true. This statement is true. India is accounting for a large portion of all the equity option contracts, not just future equity option contracts in India. It has become a large portion in the global world. Second one, India's stock market has grown rapidly in the recent past, even overtaking Hong Kong's at some point of time, which is actually true. As you can see, there is a headlines, India overtakes Hong Kong to become 4th largest stock market, right? India has overtaken Hong Kong to become the 4th largest stock market, which is true. Second one is also true. Third one, there is no regulatory body either to warn the small investors about the risks of options trading or to act on unregistered financial advisors in this regard. We have a regulator, SEBI. As you can see, SEBI has been continuously bringing rules for F&O traders, and why they do that, to such as market stability, investor protection and risk management, right? Thereby, we do find there is a market regulator, SEBI, and third one is wrong. Answer is 1 and 2 only. Question is fair and simple, but as I told you, UPSC is increasing questions on financial knowledge. They're trying to see how financially aware are you about the surroundings, that is about what's happening in the market, how the market is progressing, and how India's finance market, the capital market, is evolving, right? Moving on to the next question. Circular economy reduces the emissions of greenhouse gases. This is very, very straightforward question. It does. Circular economy reduces the use of raw materials as inputs. Definitely it does. Circular economy is all about reuse, recycle, isn't it? Thereby we find that it does reduce the use of raw materials as inputs, because you are finding that the used good can be again used as a input without having to manufacture raw materials for it. Now, circular economy reduces wastage in the production process. Yes, because many a times you are getting finished products which can be reused. For example, if you take the computer systems, many a times particular chips, particular lining materials are being reused in the new ones. There is no need to again manufacture, because when it goes for manufacturing, again there is pollution, there is again wastage. Thereby it does reduce wastage in the production process, because limited items are required. Now, when you look at the statements, you find that reduces the emissions of greenhouse gases. One, by bringing in raw materials, finished raw materials or progressive raw materials, it is reducing production, thereby greenhouse gases emission is also decreasing. Circular economy also reduces wastage in the production. Yes, this also reduces greenhouse gases. Thereby both are correct and both of them explain statement 1. Clear? Very simple question. You find that this is more of an environmental question, but yeah, you find that circular economy is a trending topic. It has been asked even in mains 2 years back, and now it's come in prelims. It's a previously asked question, you can say, if you have been alert and observant as to what are the questions UPSC has been asking. Moving on to the next one. Again, a simple question which is coming directly from basics. This is a basic oriented question which is asked: capital receipts create a liability or cause a reduction in the assets of the government. Now, capital receipts, right, is what the government receives. It creates a liability. If suppose government has taken a bond from, or has borrowed money, bond, or government has taken a borrowing from our external funding agency, if you consider in that way, then what happens is capital receipts have created a liability for the government. Government has to repay the interest. It has created a liability or causes a reduction in the assets of the government. Now, when you take capital receipts, also you find that principal payments of loans. Suppose GOI has given a loan, let's say, has given a loan to a state, GOK. Suppose GOI has given a loan to GOK, and when GOK repays the loan, the principal amount for GOI, this is an asset because it is generating revenue for them. For GOI, this is an asset, it is generating revenue for them. And when the GOK repays the principal goes into the reducing the asset numbers. Means if they had given 500 crore loan, now when they are repaying back, as and when they repay, say it reduces to 300 crores. Now the asset size has reduced, isn't it? Therefore, you find that capital receipts create a liability or cause a reduction in the assets of the government. This is true. In both scenarios, it's true. Borrowings and disinvestment are also capital receipts. This is also true. Basics. Directly from the basics, it has been asked. Now, interest received on loans create a liability of the government. Now, this is not a liability. Interest which is received on loans, when government, now principal as well as interest is received, right? The interest that is received is not a liability. Interest that is received is a receipt. It's an asset investment. It's an asset return that has come. It is not a liability. Government is not liable to pay for it. Government is receiving. Government is benefiting from it. Thereby, 3 goes wrong. Answer is 1 and 2 only. Clear? Moving on to the next one. Now UPSC has started asking application based questions. They are trying to test whether you understand what is fiscal deficit, what is revenue deficit. Now let us have a look at the question. Suppose the revenue expenditure is 80,000 crores and the revenue receipts of the government is 60,000 crores. So what is revenue deficit? Revenue deficit is revenue received minus revenue expenditure, right? So revenue received is 60,000 minus 80,000, you get 20,000 crores as revenue deficit, isn't it? 20,000 crores is your revenue deficit. And the government, next part of the question, the government budget also shows borrowings of 10,000 crores and interest payments of 6,000 crores. Now, further you're getting another 10,000 crores. This is in minus. You're getting another 10,000 crores. Fiscal deficit is what? Adding up of this borrowings. We are going to add borrowings. We are going to finally see this is what government is going to get, revenue deficit plus borrowings, which is coming up to minus 10,000 crore in this scenario. Isn't it? It is coming up to minus 10,000 crore. Now revenue deficit is 20,000 crores. We have got it. Fiscal deficit is 10,000 crores. We have got it. Now interest payments of 6,000 crores. Third part is primary deficit. What is primary deficit? Primary deficit is fiscal deficit minus interest payments. You are going to remove the interest payments, right? Now we find that interest payments is 6,000 crores, isn't it? So minus 10,000 crore, this primary deficit becomes minus 10,000 crore plus 6,000 crore, which is coming up to minus 4,000 crore. So you find that primary deficit is 4,000 crores. Answer is 1, 2 and 3. Simple. UPSC has just asked the question on an application based manner, whereby you have to use the formulas, the concepts that you have read, you have to just apply it and you'll get the answer. Clear? Simple. Let's move on to the next one. Country's fiscal deficit, again an application based question. A country's fiscal deficit stands at 50,000 crores. It is receiving 10,000 crores through non-debt creating capital assets. So it is going to receive 10,000 crores through non-debt creating capital receipts. It is a non-debt creating capital receipts. The country's interest liabilities are 1,500 crores. Right? What is the gross primary deficit? Again, when it comes to the case of gross primary deficit, we have to go with gross fiscal deficit is what? This one is the gross fiscal deficit minus interest payments, right? Which is coming up to 50,000 crores. That is the gross fiscal deficit minus 1,500 crores, which is coming to 48,500 crores. Everyone might be wondering why we are not adding 10,000, because we are going with a gross fiscal deficit. That is a net fiscal deficit. When I add non-debt creating capital receipts, I get the net fiscal deficit. This is the gross fiscal deficit, right? Thereby I am getting 48,500 crores. Answer is A. Clear? Moving on. Next question with regard to the Finance Commission, 15th Finance Commission of India, which of the following are correct? Now, what UPSC has done is, they have, in certain questions like this, they try to keep it complicated and try to make students feel, okay, we should not attempt these questions. But always the dear students, what you should do is, you should read the question once thoroughly and try to understand the question. Many a times by just reading the question, you might find one statement which will help you and thereby get your answer. See, though they have given numbers, question might look 22, 23 to 25, 26. All this is very difficult to document. But if you go to the statement 2, they are telling 45% of the net proceeds of union taxes are to be shared with the states. 45% is your keyword, whereby there was a huge debate when the Finance Commission report came, where they have clearly told 41%. Where they have clearly told 41%, because 14th Finance Commission had recommended for 42%, but it has been reduced to 41% because Jammu and Kashmir and Ladakh have been made into union territories, right? So when you eliminate this, when you eliminate the second one as wrong, if you go to the options, you find that second one is there in A, second one is there in B and D. You are only left with C, right? The easiest way to solve this question is through this method. Clear? So when you look at the economic questions, they were more on the easier end if you have been financially aware. And going forward, if you see the trend from 2022 to 23, they have been regularly asking questions on more on finance domain. Going forward, this would be my recommendation to the students to focus on the stock markets and the finances, and it's becoming very important that you start reading the economy section in the newspaper, not just from government perspective, even from markets perspective. This will be highly useful, right? That's it for today, guys. Thank you for listening.